I really think that this business, especially in the season that we're heading into right now, has maybe the biggest realistic upside potential of any business that I've ever talked about on this podcast, because it's relatively accessible and you can make this a trend on TikTok. All right. So,
Yo, what is up, guys? Welcome back to Teen Finance. Today we have an absolute banger planned. I think we're going to roll it off. Actually, talking about some finance stuff, which
we
is
got
kind of
right?
crazy.
No, we got some breaking news. I have to keep it kind of short. I have a sore throat, by the way. I had a
Oh, no.
terrible headache yesterday.
Oh, is that where you
And
were
it,
today? You weren't
huh? Yeah, it was
you
pretty
weren't at
bad this
school.
morning.
Oh,
But
man.
I'm loaded on
You
pain
missed nothing.
meds,
Okay.
so we're gonna be. I know. I'm like, it's a Monday. I'm probably fine. Missed nothing at school, but being sick, we have missed a lot in the past week ish. So
True
I'm
that.
sure a lot of you have heard in some form or another about a bank collapsing, but you might not know the details. So basically, on Friday, I believe, right?
Yeah, I think it was
Yes.
Friday. Yeah.
Friday, the FDIC seized Silicon Valley Bank because basically a good old fashioned bank run started, and the bank collapsed. To sum it up, and why is that bad? Because when banks collapse, people lose their money and people start to panic. So we're here to not to fan the flame. We're here to put out the fire, kind of calm everything down, put everything into perspective, explain what's happening so you have a little bit of a better idea. So, first, Silicon Valley Bank, not a bank that normal people really use. It is primarily a bank for, startups and things like that, other businesses in Silicon Valley. Not like your Wells Fargo, your, JP Morgan Chase, anything like that. Um, Nevertheless, it can still have ripple effects on the market. So that's why it's really important. Um, Real quick, just to explain what happened. Basically, S SVB is that what, SVB?
Silicon Valley Bank. Yeah.
I think their ticker
SVB.
might be something slightly. It might be SIVB is their ticker symbol. I saw it on StockTwits because I have like that widget on my thing. And I saw SIVB down like 60% one day. I'm like, oh, something bad
Yeah.
has just happened. Um,
Should have shorted
bas-
it.
right? um, Basically what happened was this bank had been getting a ton of money in deposits from all of these different startups, right? So we know we've been in a tech bull run for the past like 10 years ish. Um, and it really heated up in the last like 1 year. You could go have a startup. It could be, any startup. You could go in there with Colby's umbrella pen and say that you're going to use
Dude,
AI with it,
it's getting
and
crazy.
some dude in a Patagonia vest would just hand you a briefcase with like $1 billion in it. So people were getting all sorts of money from private equity and these angel investors, and venture capital and stuff like that. And once you get that money, Maseo, what would you do if you were a startup and I just handed you $10 million? Where would you go put the money?
Silicon Valley Bank.
Exactly. So all these people with their startups are putting their money in Silicon Valley Bank. And Silicon Valley Bank is like, all right, we got all this money now. We're going to do what banks do. So if you don't know what happens when you give your money to a bank, your bank doesn't hold on to that money. So by law, they're required to hold on to some of it. Do you know it's like 25%? No, it might even be way lower than that.
I think it's less than that, to be honest.
How much money is a bank required to have on hand? 3%.
Yeah. Okay, there it is.
Uh, no, 10% for large banks. So
That makes more
most
sense.
banks are required to hold 10% in reserves just on hand so they can give out deposits in cash, for example, when you want to do that. But otherwise, that money that you see when you go into your Wells Fargo app or your Chase app or whatever bank you use and you see that money, that if everyone went and tried to deposit their money at one time, it would not be possible because not all of that money is available at the time. So what banks are actually doing is, you know how when you go and give your money to a bank, you get some return on your money for stashing your money there. So in your checking account, you probably get nothing. It's probably like 0.25% or something like that. But in some high yield savings accounts, you're getting like 1.5 to 2%. So where's this money coming from? It's not just coming out of thin air. What your bank is actually doing is they're taking the money that you give them and they're investing it in certain things. One of the most common things that they do is they give it out in the form of loans. So let's say someone needs to buy a house. When you're borrowing money, you have to pay that interest on your loan. And when you give money to the bank, in a way you're lending money. So then you get an interest rate paid back to you. That's like really basic stuff, but I just want to make sure that's like really clear. When you give money, when you give someone your money, you get interest back on it. When you take someone else's money, you pay interest on it. It's like basic lending principles. So when you give your money to the bank, they're going to go and loan it out to a ton of different things. But they also are going to do things like buy securities, like bonds and stuff like that. So that's what SIVB did, or SVB did. They went and they bought a ton of bonds from the Fed. They got like mortgage backed bonds and things like that. So they have all these securities, and that's all handy dandy until a lot of people start pulling their money out of your bank. And that's exactly what happened. So people started pulling money out of SVB, and that's normally fine because you have some certain amount of money on hand. But SVB, they didn't have enough basically. So I think, do you remember what day? Was it Wednesday or Thursday? No, Thursday is when they
It was
announced it, right?
Thursday, yeah.
So on Thursday, they announced that they're going to have to sell some securities to pay these deposits back. And normally it's like, okay, no big deal. The thing is, one, they're selling the securities at a loss. Two, it's not the actual thing that's happened that really matters. It's that everyone knows when a bank starts to sell securities, bad stuff is happening, and it's the number one sign that a bank run is about to happen. Quick definition: a bank run is when everyone tries to go and deposit their money out of the bank at the same time, and the bank just simply can't pay back. If you want to turn on your history brain real quick, if you're taking U.S. history, you're probably familiar with the stock market crash of 1929, what started the Great Depression. And something that you might remember is that this is kind of how it started. So a lot of it was sell off in the markets, but the bad thing that came after that is that banks started collapsing when people started withdrawing all of their money out of the bank because they don't trust the financial institutions. And that's how banks collapse. And, people who have their money in the banks lose everything. So people know this. When they see some people withdrawing their money out of the bank, they just go and try to do it as fast as they can. So you can't be the last one. At one point, the government steps in, the FIDC, and they seize the bank on Friday. So that's catching you up to speed. Basically, what also happened was, the Silicon Valley Bank had a ton of these. What kind of triggered it in a way is what triggered people to start pulling their money out in the first place is that SVB had a ton of fixed rate bonds. And I don't know if anyone pays attention to this, but I was literally in the car when I heard the announcement that the Fed just raised interest rates. And what they're trying to do is to stop inflation, because I'm sure we all know you see gas prices and things like that going up day to day. So that's how you can see inflation is happening. How the federal government, how they implement their monetary policy, which is basically the different ways that the federal government will try to influence the economy, the different tactics that they use. The main thing is they use different systems that change over time. Right now, it's the IOER and the RRP, and they use that to try to set a target federal funds rate. But you have Jerome who's doing his best to stop inflation and listen to what the people want. And you can stop inflation by raising interest rates. But when you raise interest rates, all these fixed rate bonds that are at lower rates all of a sudden aren't as valuable because you can get new bonds at higher rates. So what does that mean? It means their price goes down. So that's why SVB was selling all of these bonds they were taking a loss on them basically, and that's what started the bank run. If that makes sense, was that simple enough?
That's good.
Fed raises interest rates, the price of these older bonds goes down because their interest rate isn't as high, and then people see this, they start selling because they predict what's going to happen in the future. I mean, economics is all just a ton of psychology and a ton of decisions that people make back and forth. So people are predicting this. They go and they pull their money out of SVB and then tumble. Bank run starts. Yeah, not pretty stuff. Maseo, what effects is this going to have on me? Like why should I give a crap about this?
I mean, the market as a whole is down. There's a lot of fear.
SVB, most of the people who have their money in there, I mean, the Fed basically, any teens listening to this literally don't have to worry about anything. Is where we want to start. The Fed insures your money in banks up to $250,000. So unless you're like a baller, unless you're like us who have like trillions of dollars stashed away in banks all around the world, you really don't need to worry. If you up to 250K, your money is insured by the Fed. Of course, people who had their money in Silicon Valley Bank, a lot of them were like, startups and stuff that have millions and millions of dollars. But what the Fed is probably going to end up doing is just liquidate the assets of SVB and then pay it out in a dividend. What that means is if you had SVB stock, you're screwed. That's just going to be a total loss. You're going to lose all your money. So just, I don't know if I didn't own any SVB stock, so we're chilling. But if you did, that's unfortunate. I'm sorry for you.
Sorry.
Other than that, I mean, a lot of other banks, a couple other actually, maybe like two in the past couple days have been seized by the Fed for ones that were reliant on SVB because banks are all interconnected, interlinked, as I should say for the for the Blade Runner reference. But your big banks, Wells Fargo, JP Morgan Chase, Citibank, all of those ones, they're kind of above this in a way. Like those banks are bigger than SVB, and you're basically going to be fine. So you don't need to worry about it too much. But the main thing you just want to watch is that this just show like a bank collapsing is not a good headline. And because it's stirring panic, even if nothing terrible is actually going to happen, like it's the psychology of everyone seeing this at the same time and worrying and not knowing exactly what it is that's going to stir the panic. So just be vigilant is all I can say. I mean, not everyone is listening to this podcast, so not everyone is like chilling out. So just be careful because at the end of the day, that's all economics is. It's just people making decisions and trading with each other. So yeah, that's my 2 cents. I don't know. It's probably fine. I'm not taking my money and putting it under my mattress or anything. So I mean, it's insured. You don't have to care. You really don't.
Yeah.
You're fine. What little transition though. What you should care about is the 3 DTC business. Just switching, taking a 180 right here. That's the breaking news. We had to get that out of the way though. It is big news. It's big finance news, and it's a good lesson on how banks and the Fed and all of that works. But it is a little bit. If you fell asleep during that, I'm sorry. If you clicked off the pod, you're lost because we're about to give you 3 amazing ideas now.
Crazy ideas.
Yeah. So let's pivot into that. Let's get into the fun stuff. Maseo, I'll let you go first. I just talked for 11 minutes. I'm sorry. I did not mean for it to go that long. I thought that was supposed to be like 3-4 minutes
like a
at max.
3-minute thing.
It just kept going. I'm sorry.
It's just like, well, there's a lot of info with it.
There's a lot of info, and it's juicy stuff.
Because
I have 2.
I had 3, and then 2 of them entirely exist already. So I have 1 now.
Okay.
So you want to start us, and then I'll go second, and then
Sure. Okay.
Yeah.
So my first one, it exists in different capacities, but not exactly. All right. So recently, I got a suit. Right.
Nice.
Suits are expensive though, and the thing is, a lot of times you want to go in person to buy a suit to get the full experience with a tailor who can check your fit and all that. But my idea is for a suit company, for the people, a suit company that doesn't mark up its prices, 120, 150%. I don't even know, but there's no way these suits cost like $100 to actually manufacture. They're definitely made for like 2 cents in a sweatshop. So my idea is to not make the suits in a sweatshop,
Oh,
but to
come
find
on.
some very a very good non-fast fashion, non-worker abuser factory to make some quality garments that still would not cost. There's no way like a suit actually costs more than $50 to make. So we're gonna make some nice suits, and what we're gonna do is we're gonna sell them direct to consumer, and we're gonna have a digital tailor. All right. So
Oh.
what you're gonna be able to do is you're gonna be able to send in different your height, your weight. You're gonna be able to send in pictures of yourself, not like pictures of just of yourself to get your general build and things like that.
Sure.
And then we're going to hire a call center of people. I have connections to a call center of this company called Jagco in Arizona, and they just purchased a new building. So what we're going to do is we're going to set up a call center of a ton of different, like, I don't know, we'll just get a ton of like kids who we'll have them watch like a YouTube tutorial on how to fit someone with a suit, and we'll line them up on a desk in Arizona, and they will be our digital tailors, and we'll just go through these height, weight, and pictures and stuff like that, and they'll get the perfect size and fitting for a suit for these people, and we'll mail it out to you. It'll cost like, I don't know, $200 or something. So we'll just have really competitive prices that undercut the market, and boom. And we'll give it a good name so it's not like cringe. It has to sound like a designer suit brand.
Uh-huh.
DTC
Crane.
suits. That's my pitch. Crane. Maybe we'll just call it Crane. But we have to know l'écran. L'écran. It has to be like French or something.
L'écran.
L'écran. Yeah, I like that. I like that. So that's my idea. DTC suits. Maseo, would you buy something from L'écran?
I think so.
I'm just saying, is it not a good idea? Like I feel like all of these things are actually like overpriced, and if you can use, oh my gosh, Maseo, we'll use AI technology to scan the images of you. Okay, so now we have the $1 billion of startup cash that we need. Now that we said the AI word,
looks crazy.
So maybe we'll do that. We'll put all of our money in Silicon Valley Bank to store it while we're setting this up. I don't see how anything can go wrong.
No, DTC I think there was like some news about them, like someone stole like $42 or something. Like
from what? From the bank?
Right? There's someone else.
I'm sure it's no big deal. It's fine. Like banks don't collapse. Banks they never collapse. Banks are too big to fail.
Banks can't.
The Fed will just bail them out.
They print the money in the back. So.
Yeah, exactly. They just have they have two Epsons in the back, and they just.
Have you seen ATMs? They're actually just money printers.
Yeah, sure.
Don't let them lie to you.
But yeah, DTC suits. I think it's a good idea. Suits are too expensive, and the markup is crazy. So let's put it online. It's like all the DTC mattress companies. I think it's the natural next move.
Right down the street from the building is a school, elementary school. Those are your workers. Your workers are down the street.
Dude. That's great. You can't joke about it. That's a joke. That is not serious at all, bro. That is crazy, Maseo. Why would he meant the teachers at the elementary school.
The teachers. Yeah.
That's what he said. He literally said, okay. Moving on, bro. That's yours. That's crazy, bro. We're gonna get canceled. We meant the teachers.
This video's gonna be like 1 view. And we're gonna wonder why.
If my forehead vein is popping, that's when you know it's gone serious.
Okay, so here's my idea, right? It's direct to consumer. I think I would do a subscription-based thing for this, but it would be it'd be subscription boxes for the gym, but it'd be based off of your time in the gym. So it would be like your first. So it's like a lot of people will say like, "Oh, I want to start going to the gym. Like, I don't really know where to start." And so what the first thing we'll do, you pay like I don't know how much it would cost, but you pay. They send you. It's like a personal trainer that's like contracted out. They send you a personalized workout routine and a diet, and they send you like some equipment, like maybe some supplements, maybe like a pre-workout,
Some trend.
maybe some tren, some gloves, maybe some whatever you need, whatever you need for your first month of lifting to get yourself in there. Maybe some nice socks or some nice shorts. And then your third month comes around and you talk back with your people. They revise your training regimen and they send you some more stuff for your third month in. So now they send you maybe like a lifting belt. You're getting a little more serious now.
Okay.
You get like a lifting belt. Maybe they send you some protein powder. Oh, protein powder probably in the first one. They send you some more protein powder, some more supplements, and they revise, your diet and all that stuff. And then, another 3 months pass. They send you some more stuff. They revise your routine again. They send you more goodies.
Uh-huh.
And I'm assuming like the supplements be sent on a monthly basis. And like every 3 months you would revise the routines to an extent. But I think it's just kind of like a way to combine them all together though. Because there's subscriptions to like protein powder.
Yeah.
And there's personal trainers you can buy. But I feel like this is like kind of gets it all together. And it gets people committed too. It's like, as you talked about a long time with the sunk cost fallacy.
That's
like
true.
That could definitely like
it's one more sunk cost you can attach to the
it.
gym. Yeah, I like
Exactly.
it. I like it. It's like my body tutor with an added physical product attached to it. So my body tutor is like this Zoom call personal diet trainer thing that a lot of people highly recommend. Like Sam Parr from MFM is huge on this. Like
Really?
bro literally plugs my body tutor in every episode. So yeah, people like my body tutor, and I think if you just attach like you're saying a physical subscription box to it, and like you talk to your tutor about what things they recommend for you, but then you just upsell them by sending it directly to them and not having them go out to the grocery store and get that stuff. I think you could partner with certain supplement companies that obviously offer a broad enough product category to where you can actually give people like truly specific things for what they need that'll help them. But you can get bulk deals and stuff like that and just send stuff out that way. I like.
Yeah. That's my plan.
Good plan. I like it. No, that's actually solid. I'm gonna have to purchase this. What's the name though?
Gymology.
Okay. Almost. You're getting close to one of the names I had for my next one. But I guess adding the ology is just a go-to for us. Just a go-to for us. Carology. Yeah, that's funny.
Yeah. Another
okay. Here's my next one. I think this one actually has crazy upside potential, and it could be the next big thing. I really think that this business, especially in the season that we're heading into right now, has maybe the biggest realistic upside potential of any business that I've ever talked about on this podcast, because it's relatively accessible and you can make this a trend on TikTok. All right. So baseball season is starting. All right. I play baseball, so I can tell you with confident inside knowledge that the number one priority of every single teenager heading into their high school baseball season, especially the JV kids, but even everyone, their number one priority before the season, it's not going to the gym and getting ready. All right. It's not like eating healthy and making sure that their diets are good. It's not getting 7.5 hours of sleep. It's not even practicing before they get to their actual games. The number one priority is getting dripped out. All right. These kids cannot perform to their highest potential unless they're wearing their Oakleys and they got their shiesties on and they got their arm sleeves and stuff like that. All right. The problem is these high schoolers are broke. All right. They ain't got no money. None of these baseball kids work jobs. Okay. We have practice. We literally go to school and we have practice from 3:45 until it's pitch black. So there's no money to be had. All right. It's always just going up to ask, Mommy, give me money so I can buy $150 Oakleys. The thing is, Oakleys cost that much. All right. So we're looking at like $150 for a pair of plastic sunglasses. All right. There's no glass to be seen in these fools. Okay. They're athletic glasses. You can't put glass on them. That's a safety hazard. These like shiesties kids are buying, like the little like ski mask type things, arm sleeves, all of that costs money. They're chains, okay? Kids are literally going to practice and they're like paying to buy chains off of each other because they can't afford to buy them new. So the thing is, Oakley's literally, like, Luxottica owns all these sunglass companies. Like Ray-Bans with real glass and polarizers cost like $15 to make. Those Oakleys
Yeah.
that kids are wearing, I guarantee you they cost like $10 at max. So what we
No,
want to
it's probably
do,
less than
it's
that.
probably less than that. I mean, Pit Viper kind of proved this, but even Pit Vipers are $60. Like,
Dude,
that's still
Vipers
way
are
too
good.
much. So what I'm saying is we need to start a trendy D2C baseball drip company, and then eventually we extend into the entire sports market. So what you
Yeah.
need is, it's like what Pit Viper did. You need a trendy name, and you need to get this everywhere. And we're going to undercut the market. We're going to charge less than Pit Viper so we can make it truly accessible. All right. Because we want this to be for everyone. I'm saying like $30, $40 for a pair of sports sunglasses. We'll throw in a couple free lenses and things like that. Or we can make it so you can customize your own glasses and make it so it matches your team colors. Okay, like Oakley does that, but it probably costs like $700. So we're gonna do it for like
Probably.
$50. You want to get a matching arm sleeve? Yeah, we'll do that too. You know what? We'll make a set with a shicey and arm sleeve of some sunglasses and a chain and some grip tape for your bat. And then eventually, once we max out baseball and once every high school kid in the country is wearing our stuff, then we break into basketball, because football kids need to have their gloves and their arm sleeves and their cleats and all that. Maybe we start making shoes. Maybe we get into the cleats. I just see how this can grow exponentially, and all you need to do is get 100, like 100 pairs of sunglasses. So 100 times 10, $1,000. Maybe it probably costs more. We'll say like $3,000 for your initial batch or something. You give out these sunglasses to a lot of like the influencer baseball kids. I'm not like talking like big people. You just give them to all these people that have like, a couple thousand followers or some college kids, and you get this to become a trend on TikTok, and you get people to see this brand and they go and see how much it costs, and they're like, $40 for a legit brand? Yes, sir. And they go and buy it. This is
That's solid.
like, do I need to do this or something?
I think you do. I mean, you sound prepared too.
Like, okay, this is a committed business. This is a real business. This is no passive income, 2 seconds to set up. If you want to do this correctly, you need to get like in contact with the supplier to get your brand on everything you make. You want to get the shiesties need to be like embroidered with your logo. The arm sleeves need to be embroidered with your logo. Like, all of this needs to happen. But once you get it set up, I mean, the amount there are like, how many people, how many high schools are there in the country? Like 15,000. What is 15,000 within what's the average baseball program size? Let's say times like
Or, like
30 ish.
30 people. Yeah.
That is a whopping 450,000 people. That is just your market in the United States. Now think globally. Like, this is all I'm like, and then all the other sports. And you remember when like people bought Pit Vipers? Every single racist in the country needed to have a pair of those. Like, there is so much potential upside. I think seriously, this is a big idea.
This is strap. No, it's
I don't
good.
have a name though. That's the thing. You need a good name. Baseballology.
Baseballology.
It's a really bad name, man. But
Ballology.
I don't know. You'd have to get a good name. Like, you'd have to find the next Pit Viper or the next Oakley, basically. But at the same time, I don't know. Like, Oakley is just someone's last name, is it not?
I think
Maybe.
so. Yeah.
I don't know. We'll just call it Crane. For I don't know.
Craney.
Craney. You get people to
Craney would be
mispronounce
kinda
like
tough.
that. So I don't know. You'd have to find a good name. I don't know if it matters that much, but you just have to make this drip. You'd have to market it on TikTok. You have to get everyone wearing it, and you just have to get to the point where people are not embarrassed to be wearing your brand, and then you've made it. That's all you need. Not
That's
embarrassed.
true.
We're not looking like people being proud to wear a brand is that's extra credit. All right.
Yeah.
But we just want them to be not embarrassed so that they buy your $40 sunglasses over Oakley's $160 sunglasses. It's the only goal. Yes, that is mine.
Fire.
I rest my case. DTC baseball drip and sports drip is the next big thing. Yeah,
It's
I'm
actually good though.
passionate about that one, man.
I think I've seen those for football before, like the visors.
Yeah, bro. I mean, you could sell. Yeah, exactly. You could sell visors. You could sell like matching visor, arm sleeve, and glove packs to football players. And
That's
any of
cool.
that. Any of that. Christmas gift? What? Huh? Oh my
Huh?
gosh.
Christmas.
Birthday
Merry
gift? What?
Christmas.
Huh? Oh my dude. It's just perfect. It's a perfect. It's ideal. It's ideal. All right.
Like
Let's
marketing to parents. Yeah.
let's
Okay.
move
Sorry.
on. We're at 30 minutes, Maseo. Let's hold off on my next thing and let's just head into your little thing that you're gonna end it off with.
Which my
Your
what?
the last thing on there that I
Oh, yeah,
want
yes,
you to
yes,
be able
yes,
to
yes,
say
yes,
it
yes.
first. I don't want to spoil it.
Okay. So, I was doing a little bit of researching, and I was talking to my dad. And he said he met this guy who had a company. It's called Ethos, right?
Okay.
And what they're gonna be is a intergalactic gas station.
Okay.
I don't
explain, please.
Okay, so I don't know if they've gotten to the intergalactic part yet, but they're a gas station in space. I feel like intergalactic sounded cooler than space station.
Wait, so are
Space
they like
gas station.
renting? Are they like paying rent to like the moon aliens or something? You got
No. So
moon
hear that.
lords.
It's really interesting. So on the moon, there's ice like underneath the surface, right?
Mhm.
So that means there's water on the moon,
Yeah.
and inside that water, it has a different.
Sure.
Or not water exactly. It's a different chemical construction than.
There like might be a lot of water on the moon. It's like, eh.
Okay, well they're
We know there's
gambling
like
off
some
the
ice
chance
at
that
the
that's
poles.
right.
Yeah.
So, and their whole plan is they're gonna mine this like ice or material from the moon
Mhm.
and create rocket fuel from it in
Yes.
space.
Uh-huh.
In space, and they're gonna set up gas stations for spaceships between the Earth and the moon, which will allow for cheaper refueling in space rather than having to go back and refuel. And I don't know the chance of this actually working, but
Confused. Between the Earth and the moon?
yes, or sorry, just like somewhere up there. That's
On
their
the
plan.
moon.
They're gonna put gas. No. It's not gonna be on the moon. It'll be in space. It'll be free floating
Why do
gas
you
stations. I don't.
why do you need gas to get to there's no gravity.
What for a rocket?
Yeah. You don't need gas to get you. You just need enough gas to get out of the atmosphere. And then you just need enough propulsion to like change. Maseo, we're in physics. We know this.
You're right. Okay, well, their business model is is rocket fuel in space.
Did your dad
So
just like me? Is this like a homeless guy your dad met at Casio?
he went to like a tech startup like meetup, and these guys were there. And then here. You want to hear the most ambitious part of their plan?
Okay, tell me.
Is-
It can't get any worse than that.
No, it can. So here, sorry. Let me pull this up. So their big
The
thing.
forehead vein is popping. You know this is going crazy, bro.
They're on their website. It says all caps. Earth is too hot.
What's their website?
It's called ethos-space.com.
They couldn't afford the one without the dash.
No, the website's also pretty terrible. But so they
Okay,
wanna,
wait, no, it looks kind of cool, but why is the landing screen not take up the whole page?
Yeah, I don't know.
Water is the oil of space.
That's what I'm saying, man.
Oh my gosh, they're selling me on it. How can I give them money? $1 to refuel?
That's what I'm saying. It's cheaper to refuel there. But
Oh
do you
my
see in the
gosh.
bottom? You see in the bottom right of their diagram here?
When rocket fuel is cheaper than gas at AJ's.
Normal gas. Do you see their diagram though? The one with the $1 on it. You see in the bottom right that shape of stuff.
Yeah.
Squares. So that's supposed to be a sunshade to block the sun from Earth to reduce global warming.
Okay. Okay.
And that is their
Yeah.
their master plan. Map lunar ice in economic detail. Mine it to sell rocket fuel. Sell fuel in orbit. Expand lunar production and metals and power. And build a planetary sunshade to reduce global warming.
Is that how that works?
No. I mean, I don't know. They have funding.
Stop. Like, global warming happens because we have like an atmosphere and like stuff gets trapped in it.
I guess if we just make the whole thing
And
colder.
it's like holding in heat. I mean, I
Yeah, and I
guess
feel
if
like
you just
the
block the
sun really
sun,
isn't the problem, but
I'd
could like
imagine
counteract it,
blocking
I
the sun
guess.
would cause some other problems, like
Would make it a
in
little
growing like in like agriculture and things like that and stuff
yeah.
that needs sun. But hey, that's a
And then
discussion for another day.
yeah, and I don't really understand if their sunshade is also a gas station or is their sunshade just pieces of metal in the sky.
Maybe they need the gas station so they can go make the
So they
sunshade.
can go build a sunshade. Well, you know what? That's my big kicker. I wanna hear everyone's thoughts on this. If you have some friendly words or some not so friendly words, just let us know. Because I'm kind of
Send fuel factory from Earth to Moon. Make fuel on Moon from ice. Export fuel to space depots. Sell customers fuel anywhere in space. I mean,
it's like
okay, some of the diagrams they have like pretty legit.
pretty
They
convincing,
definitely
yeah.
just like hired a 6-year-old on, or they definitely like hired like an Evan type of person on Fiverr who just like has extra time and wants to mess around in Blender to make them these diagrams. I like how there's just like 8 starships on there.
Just everywhere. Do you see their temperature tomorrow equals temperature today plus delta future emissions minus delta emissions removal minus delta solar engineering?
Temperature tomorrow equals temperature today plus change in future emissions minus change in emission removal minus change in solar geoengineering. Okay.
I don't really understand what
These
they mean by that, but
founders.
you know what? You go, guys.
Um
You do that.
yeah. Good luck, Ethos. Slightly confused on the idea of like, I mean, I get like refueling to Mars makes sense. You make a gas station on you make a gas station on the moon so that you only need to make your rocket big enough to have enough fuel to get out of the Earth's atmosphere and to the moon, and then you can eventually just do shuttles between the Earth and Moon, and then you can refuel because it takes less it takes less gas to get out of the moon's atmosphere than
Yeah.
the Earth's,
Well,
or
actually, in their
the
diagram here, they show the gas
gravitational
station
whatever.
floating in space. So,
Yeah,
so
yeah,
if someone just
I don't know.
decided to rear end the gas station, is it just gonna inevitably fly away?
I'm not crazy, right? Though, like you only need gas to change the trajectory of your rocket, but like hopefully you just like don't mess that up. And if you
Well, I
do, it
think
doesn't take that much to correct it. And then you need enough gas to get like out of whatever, out of the atmosphere and out of the gravitational field of whatever celestial body that you're landed on.
But I think when you're in space, though, you still need force to move. I guess there's no resistance then. It's like you'd always be
Well, no,
moving.
you just
Just
fire
you control the
engine once and
direction.
that's it.
Yeah.
And then you just keep going because there's
You just
nothing
click it on.
stopping you.
You just
Inertia,
hold it
inertia,
steady.
baby.
Law of inertia.
Newton's first law, I believe, right? Yes.
Yes, sure.
First law.
I
First law.
think I got that question wrong in the test.
Could not be me, bro. Okay. What did we go over today? We talked about a bank. We went from
Intergalactic
a
gas
bank
station.
collapsing to intergalactic gas stations with baseball, shiesty, and drip in between. What a crazy episode, man. Welcome back to Teen Finance.
We're back.
Mark your
baby.
calendars for next week. Who knows if we'll still be called Teen Finance by then. Name changes, man. We need more
Incoming
feedback.
merger.
If anyone actually listens to our podcast enough to make it to the end of this episode, you are the only person that matters. So tell us if we should change the name to Back of the Envelope ASAP. Thank you. Our email is teenfinancepod@gmail.com. For now, mark your calendars.
For now.
We'll see you next time. Later.
See ya. Bye.